Welcome to Manifested Publishers. My names are Mr. Mariga. I'll be teaching Advanced Management Accounting, and today we will continue with the topic of planning and decision making technique. Specifically, I want us to talk about the various applications of marginal costing. The various applications of marginal costing. Now, marginal costing is a method of costing, or is a costing method that requires the user to determine variable costs, such that your variable costs will comprise of direct materials, direct labor, direct expenses, and variable overheads. Overheads. Right. This method, known as marginal costing, is also known as contribution costing, or variable costing, or direct costing, It is referred to the above names because you consider both, you consider direct cost as part of your production costs. You also consider variable cost when you're determining your production costs, So therefore, using marginal costing, your variable production costs will be made up of direct materials, direct labor, direct expenses. Then you're also going to add your variable production overheads. Apart from that, apart from knowing how you determine your production cost using marginal costing, it is also important that we remind ourselves how we determine contribution. So contribution is the difference between your selling price and your variable costs. So it is a difference between selling price and variable cost. This particular concept was covered when we were talking about cost volume profit analysis, both in intermediate level, and we have also covered it in advanced level. However, today I want us to talk about the various applications of marginal costing. So today I want us to talk about the various applications of marginal costing. So the applications of marginal costing is what I want us to do to talk about. The applications of marginal Remember, we've said marginal costing is also known as direct costing. It is also known as what? Contribution costing. It is also known as variable costing. It is also known as variable costing. Why? Because you normally calculate your production cost by considering only variable production costs. All right. The first application of marginal costing, application number 1 that we will talk about, is what we refer to as limiting factor. It is known as limiting factor analysis. We have a second application known as throughput analysis. Throughput analysis is the second application. You have make or buy decisions. Number 4, you have special offer decisions. Number 5, you have drop or continue decisions. Drop or continue decisions. Let me start by highlighting the first application of marginal costing. Let me highlight or talk about the first application of marginal. And the first application is limiting factor analysis. Limiting factor is what is referred to as a scarce resource. So a limiting factor is a resource that is not enough, such that it will normally prevent the company from meeting its demand. So limiting factor is a scarce what? Resource. This is a scarce resource. A resource that is not enough, i.e. a resource that is not what? Enough, or is limited in its availability. It is limited in its what? Availability. I.e. it is not what? Enough. That resource that is not enough, it may be materials, it may be labor, it may be production capacity, it may be even what? Space. Okay? As an organization, when you are faced with a limiting factor or where you don't have enough resources, you are going to maximize the contribution per limiting what? Factor. So when you don't have enough resources, you as an organization should decide on the units and the product of the product you're going to do what? Produce, such that these products that you're going to produce are the ones that are going to generate the maximum contribution. Now, for us to be able to deal with a question on limiting factor, or for us to be able to identify the product that will maximize the contribution per limiting factor, we must always start by identifying the what? The limiting factor. So the steps that we follow when you want to identify your limiting factor units to produce, steps to follow. Number 1, start by identifying your limiting what? Factor. You determine limiting what? Factor. Once you've determined the limiting factor, the second step is determine your contribution. You must determine your contribution per unit, per product. You determine your contribution per unit, per who? Per product. Number 4 is you're going to determine your contribution. Determine your contribution per limiting factor. Per who? Per unit. Per who? Per product. Per unit, per who? Per product. Next step after that is to determine your to rank, or to determine the rank of your products. And the rank here, or the products that you're going to rank, will be ranked that the product with the highest contribution per limiting factor will be ranked first. Will be ranked what? First. And remember that the contribution per limiting factor per what? Per unit will have been computed by note number 4. Will have been computed by step number 3, not number 4, by step number 3. So we are saying you rank according to the highest contribution, per limiting factor per unit. That should be your order of what? Rank. Then step number 5, you determine your optimal output. And this optimal output will be according to the rank above. According to the rank what? Above in step what? In step D. This step here above. Right. That are the basic steps, or those are the steps that are going to be used when an organization is faced with a limiting what? Factor, a scarce resource. And we can have an illustration. And our first illustration, the illustration I want us to talk about, is a question of April 2022. April 2020. Question 2A. April 2022. Question 2A. The question states, Zinc Limited is a local manufacturer of 3 products, namely X, Y, and Z. The management of the company is unhappy with the current production mix and is seeking advice on the most optimal arrangement. The current production is 10,000 units of X, 5,000 units of Y, and 6,000 units of Z. The management accountant has provided the following information relating to the 3 products. You have your details. You have the product X and Y. The selling price per unit of X is 1,200, of Y is 2,000, of Z is 2,250. Your production cost of materials is 300, of Y is 900, of Z is 600. Your variable overheads of X is 150, of Y is 400, of Z is 450. Additional information. Each type of product passes through 3 departments in which a different type of labor is used. The labor requirements in each department are given below. Department 1, your rate per hour is 20 shillings per hour, where X requires 3 hours per unit, Y 4 hours per unit, Z 6 hours per unit. Department 2, the rate per hour is 40 shillings per hour. Your labor requirements are 1 hour per unit in X, 2.5 hours per unit in Y, 4 hours per unit in Z. Department 3, your rate per hour is 30 shillings. Your labor requirements per unit of X is 5, Y is 7, and Z is 9. Number 2, if there is a shortage of labor in Department 2 and it is not possible to increase labor input hours beyond the fully utilized current hours. Fixed overheads are budgeted at 5 million shillings per annum and are expected to remain constant. A recent market survey disclosed that the maximum sales potential for the company is 12,500 units of X, 7,500 units of Y, and 8,000 units of Z. Advise the management of Zinc Limited on the most profitable production mix and the optimal profit using limiting factor. So I want us to tackle this question of April 2022. Question what? 2A. Let me have that here. We will follow the steps as I have indicated. It is limiting factor, remember. Okay. So the first step is you first determine the limiting what? Factor. That is step number 1. So we even write here. Step 1. Determine limiting what? Factor. I'm going to guide you through this slowly so that you see what is happening. So determine limiting what? That is the first step. The limiting factor will be determined by comparing the available resources with the required what? Resource. So here we compare our available what? Resource with your required resource. They are saying currently, note number 2, that there is a shortage of labor in department 2. So here you're going to say your available labor hours in department what? 2. Your available hours in department 2, we're going to have to calculate them now that you've not been given how many hours are available. But additional information number 1, each type of product passes through 3 departments in which a different type of labor is used. The labor requirements in each department are given below. The labor requirements per unit of X in department 2 is 1 hour. But for you to produce X, yeah, you currently are producing how many units? 10,000. Currently are producing 10,000 units. Therefore, for you, the normal or the available labor hours will be dedicated to produce X are how many hours? 10,000 hours. Why? Your labor requirements per unit is how much? 2.5, and your current production is how many units? 5,000 units. Therefore, the labor requirements of what? Of Y will be what? 2.5 by who? By 5,000, which in this case will be how much? 12,500 what? Hours. The third product is who? Z. And to produce Z, you will use 4 hours per unit. You multiply that by your current production, which is 6,000 what? Units. So for you to produce Z, you require 24,000 what? Labor hours in department what? 2. Then after that, you now determine all your total labor hours that the current department 2 has. All the labor hours that are available in department 2 for Zinc Limited. And how many hours do you have available? 46,500 who? Once you've determined your available labor hours, what do you then need to do to determine your who? You will need to determine your required labor hours. Your required labor hours in department who? In department who? Again, you will need to produce X, you will need to produce Y, and you will also need to produce who? Z. For you to produce a single unit of X, you need 1 hour per unit, but the market demand, according to a survey that was conducted, is that you have a potential to sell 12,500 what? Units. Therefore, you will require 12,500 who? Hours to be able to fulfill that particular what? Demand. Why? You have 2.5 hours per unit, but the market demands that you produce 7,500 who? Units. Therefore, you require how many hours? You require 18,750 hours. Then Z, you require 4 hours per unit, or you'll be using 4 hours to produce a single unit, but your demand in the market is of 8,000 units. Therefore, your total required labor hours are 32,000. So you add this 12,500 plus 18,750 plus 32,000. So here you will need or you require 63,250 hours. 63,250 hours in which department? In department 2. Then let's see how much deficit we have. Let's see the deficit. You available labor hours are 46,500 labor hours, but what you currently require is 63,250. Therefore, you have a deficit or a shortage or a shortfall of 46,500, 63,250. Therefore, you have a shortage of 16,700 and what? 50 skilled labor hours in department what? 2. Labor hours in department. Now, because you don't have enough hours here to produce all these units of what? X, Y, and Z, you must decide of the 3 products, which one am I going to produce first? Which one am I going to produce last? Apart from deciding the order of the products you're going to produce, you also will need to determine the units of each product that you're going to produce in that particular what? Period. For us to do that, now that we've determined our limiting factor, we will determine our contribution per unit per who? Per product. But before we determine that, let us therefore here say, therefore, your labor hours in skilled, department 2 rather, in department 2, it is the limiting what? Factor. The limiting who? That is a limiting factor. How do we know? Because here we have a what? A shortfall or a deficit. You require for 63, but you only have what? 46. You can only use what you have, okay? So therefore, your limiting factor per unit, X is who? 1 hour per unit. Y is who? Is 2.5 hours per unit. And Z, lastly, is 4 hours per who? Per unit. 4 hours per unit. That is the limiting factor per who? Units. And that is also how you determine your limiting factor. Remember, we said a limiting factor is a scarce resource. Those hours of 16,750 represent the scarce hours you don't have. Step number 2 here is to determine your contribution per unit per who? Per product. So let's determine our contribution per unit per product. Contribution per unit. To determine contribution per who? Per unit. Let's determine contribution per unit. How do you determine contribution per unit? The contribution per unit is normally calculated by taking the difference of your selling price per unit and your total variable cost. So we can start with the first product. The first product is known as what? Again, you're going to take your selling price per unit. Your selling price per unit of X is 1,200. You less your variable cost, and the first variable cost is the cost of direct materials. And your material cost is how much? 300. You have another variable overhead cost, is your other variable cost, which is 150. Then you also have a cost known as direct labor cost. And your labor cost was in department 1, department 2, and department 3. Department 1, you are using 3 hours. Department 1, you are using 3 hours at a rate of how much? 20. So that your labor cost is how much? 60. Department 2, let me say, department 1 is being paid at how much? 20 shillings per hour. So if you work for 3 hours, you're going to be paid 60 shillings. Department 2, you're being paid at 40 shillings per hour. And department 2, they worked for how many hours? 1 hour. So therefore, they were entitled a cost of how much? 40. Department 3, they're working for 30 shillings per hour. And they worked for how many hours? 5. So 30 by 5 must be 150. Then we determine our contribution per unit. We've said the contribution per unit is simply the difference between your selling price and all your variable what? Costs. Let's go to Y. Your selling price per unit ni ngapi? 2000. Your material cost is 900. Your variable overhead is what? 400. Your labor cost in department 1, which was paid at 20 shillings per hour, but they worked for 4 hours. So 20 by 4 is 80. Department 2, they worked for 2.5 hours. They worked for 2.5 hours, but each hour is being paid at how much? 40. So therefore, they will be paid how much? 100 shillings. Department 3, they worked for 7 hours and each hour is being paid at 30. So that they will be paid how much? 10. The other department is department who? Z. Your selling price 2250. Material cost 600. Variable overhead cost 450. Labor cost of 6 by 20 120. Department 2, 40 hours per hour by 4 hours is 160. 30 hours, 30 shillings per hour by 9 must be 270. Then we now get our contribution. The difference between what? Selling price and all your variable costs and all the variable costs. Okay. So let's calculate it now. Let's calculate it. Remember, we are determining our contribution per unit. 1200 minus 300 minus 150 minus 60 minus 40 minus 100 and what? 50. The contribution per unit of X will be 500. 2000 minus 900 minus 400 minus 80 minus 100 minus 200 and 10. 210. 2250 minus 600 minus 450 minus 120 minus 160 minus 270. That must be 600 and what? Step number 2 is done. So let's go to step number 3. Step number 3. I hope we are together. We have successfully determined the contribution per unit. The next step on dealing with limiting factor is to determine your contribution per who? Per limiting factor per unit. So let's go to step number 3. Factor per unit. Determine contribution per limiting factor per unit. You have X, you have Y, and lastly you have which product? Z. To determine the contribution per limiting factor per unit, you're simply going to take your contribution you divide that by your limiting factor. And your limiting factor, remember we said, is your labor who? Hours. So you're going to divide this by your labor who? Hours. You're going to divide that by your labor what? Hours. Your labor hours. Per unit, X, Y, Z. The contribution per unit is as per step 2, 500, 310 and 650. 500, 310, and lastly how much? 650. You divide that by your labor hours per unit. That is the limiting factor. Remember, these labor hours per unit are the limiting factor. X is 1 hour, Y is 2.5, Z is 4. So you say 1 hour per unit, 2.5 hours per unit, and 4 hours per who? Per unit. So this will give you your contribution per labor hour per unit. Per labor hour per who? Per unit. 500 divided by 1 is 500. Then 310 divided by 2.5 must be 124. 650 divided by 4 must be 162.5. 162.5. We have determined the contribution per limiting factor by simply doing what? By taking the contribution, you divide by your limiting what? Factor. And remember, your limiting factor was the labor what? Hours. It was the labor hours. The fourth step is to rank, or what we simply denote as priority ranks. When we say priority rank of production, it is basically you want to identify of the 3 products you want to produce. Which one will you produce first? Which one will you produce second? Which one will you produce the third one or the last one? You want to produce X, Y, and who? Z. Now, the rank in here is normally based on what? It is based by the maximum, or you compute it, or you consider your maximum contribution per limiting factor. So once you've determined your contribution per limiting factor, you're going to look at the one with the maximum what? Contribution per limiting factor. That you're going to rank it as number 1. Then the second, you're going to rank it as number 2, and so on and so forth. Our contribution per limiting factor, which is your contribution per labor hour per unit, was how much? 500 for X, 124 for Y, and 162.5 for who? Z. Then you do what? Rank. According to the contribution per limiting factor above, the first rank should be product 1. Product 1, which is what? X. Let me write that using a different color pen. Product 1. Then product 2 is Z. Then product 3 is Y. Because the one with the highest contribution per limiting factor is X. Then the next highest is Z. Then the least highest is what? Y. That is step number 4. Step number 5 is now to determine the units of output of each product that you're going to do what? That you're going to produce, what we refer to as optimal production mix. Optimal production what? Mix. So here we want to identify according to the ranks here, and now that we only have 46,500 hours, how many products of each product are we going to produce? How many units of each product are we going to produce? So you're going to start here by identifying the products according to the rank here. Then have your available limiting factor, and we know what is our available limiting factor. Your available limiting factor is your labor who? Hours. Your labor hours was the limiting factor. Then your required labor hours, which is now your required limiting factor. Then lastly, you have your output, and your output is in what? Units. Your output is in units. Wonderful. The first product we want to produce according to our rank is what? X. So here we write product X. The available hours that organization currently have is 46,500 hours. So here you write 46,500 who? Hours. For you to produce product X, the required labor hours here are how many hours? 12,500. 12,500. And then now we need to identify our who? Output. Okay. But remember that X, for you to produce a single unit, you are using how many hours? 1 hour. So if you have 12,500 labor hours, how many units are you going to do what? To produce. So what will you do? You're simply going to take your required hours, 12,500, you divide by the labor hours per unit, which in this case was how much? 1 hour. So at the end of it all, you will need to produce 12,500 units. 12,500 units. The next product according to our rank is product who? Z. We write here product Z. Now your available hours will have to do what? To change. Why? Before production of X, you had 46,500 labor hours, but you have used how many labor hours? 12,500. So for you to produce Z and Y, you only have how many labor hours now available? 34,000 labor hours. which is simply 46,500 minus 12,500 to give you 34,000. Then we ask ourselves, for us to produce Z, how many labor hours do we require? And we require how many labor hours of Z? 32,000. 32,000. So here we are going to write how many hours? 32,000. Then let's identify the units we want to do what? Produce of who? Z. For you to produce a single unit of Z, you required how many hours? 4 hours per unit here. If you currently have 32,000 labor hours, how many units are you going to use to produce? So you'll take 32,000, you divide by who? By 4. So you're going to produce how many units? 8,000 units. 8,000 units. The last product that we will produce, that we should produce, is product who? Y, because it is the one that was ranked number 3. For you, before you produced Z, you had 34,000 labor hours, but you have used 32,000. So therefore, how many hours are remaining? 2,000. But for you to produce Y, you require how many labor hours? 18,750. Now that you don't have 18,750, how many hours are you going to use? 2,000. Remember, you can only use what you have. Okay, so here, even if you require 18,750 hours to produce Y, what do you currently have available? 2,000. And these 2,000 labor hours are the ones you're going to use to produce a certain number of units of who? Y. And how many units are you going to produce? You're going to take your hours that are required, 2,000 hours, then you divide that by how many hours each unit is producing. For Z, for Y, which is how much? 2.5. So you divide this by 2.5. So you should end up producing how many units? 800 units. You will end up producing 800 units of Y. Now that is clear, we have determined the units of each product that will utilize our who? Our contribution margin. This question also required us to determine the optimal production what? Mix. This is your optimal production mix here, but they were also telling us to determine our optimal profit. Now, your profit here, we know, is given how? How do you determine your profit? Your profit is determined by taking P minus V, you multiply by the units, minus your what? Fixed costs. Minus your fixed cost. But remember, P minus V is your contribution what? Margin. You multiply by your units, minus your who? Fixed cost. Minus your fixed cost. Then, so let's determine our contribution. Our contribution, which you know it is your contribution margin. You multiply by your who? Units. But now, these units here, we are going to use the optimal what? Output units. Because they're asking us for the optimal profit. Therefore, the optimal output units here are the ones we're going to multiply by the contribution of each product to determine our total contribution. How is that we're going to do? Let's start with product X. Product X, your contribution margin of X is how much? 500 per unit. you multiply that by the units of x that are optimal. And the units of x that are optimal is how much? 12,500. So you multiply here by who? 12,500. The next product is who? Y. And Y, your contribution margin is how much? 310. Then 310 you multiply by your who? Optimal output, which is 800 here. So what? 310 by 800. The next product is who? Z. Your contribution per unit is 650. You multiply by the optimal output of Z of 8,000. So 650. You multiply by who? 8,000. You multiply by 8,000. So let's determine that. 500 by 12,500. That should be 6,250. Return by 800, 248,000. 650 by 8,000. You now get the total 6250,000 plus 248,000 plus 5,200. $11,688,000. This will give you your total contribution. But then we need to subtract our who? Fixed costs. Your fixed cost. And how much was your fixed cost? Your fixed cost was given by note number 3, and your fixed cost by note number 3 is saying fixed overheads are budgeted to remain at how much? A constant value of 5 million. So we are going to subtract 5 who? Million. So hapo here your net profit, your net profit will be how much? 6,698. So therefore your optimal profit is how much? 6698 what? 6898,000. 6898,000. And that is how we did with limiting what? Factor. With limiting factor. Now, in case they had asked us, let me just highlight this. In case they had asked us for your maximum profit, sometimes they may also ask for your maximum profit. In case they ask for the maximum profit, yeah, you're going to determine your maximum profit here by taking your contribution margin or your contribution CM by your units of Q. But now these units here are Q, are the units that correspond to maximum what? Sales or maximum what? Output. So these Q units here, should be what units? Your maximum units sold. Your maximum what? sales demand here. And the optimal production mix, when they ask for optimal profit, I hope you've realized, and I know you've noticed, that these units are the optimal units produced. Optimal units produced here. And these are these units here. But now, when they say what? Determine maximum profit, your contribution will be a product of your contribution margin. But now the units are the maximum available what? Sales. Let me even use this question to show you what I mean by that. We can start with X. No changes to the contribution margin, 500. Then your maximum sales demand was given by additional information number who? Number 4, where X, your maximum sales is 12,500. Y, your contribution margin is what? 310. With the maximum sales demand of who? 7,500. Z is 650. With a maximum sales demand of how much? 8,000. 8,000. So let's calculate this. Let us calculate this. 500 by 12,500. That is 6250. $310 by 7,500. 23 to 25,000. 650 by that is 5.2 million. Your total contribution $62.50 plus 23.25 plus 5.2, 13,775,000. Then you less your fixed costs. And your fixed cost, remember, do not change with output. So therefore, they will be how much? They will remain a constant of 5 million. Your net profit is 87,75,000. Therefore, maximum profit is how much? 87,75,000. 87,75,000. And that is how we deal with limiting what? Factor. With limiting factor, a scarce resource. Right. Now that we're done with limiting factor, or we have covered the limiting factor successfully and exhausted that, in the next session, I want us to cover throughput counting or throughput analysis. And throughput analysis is very, very close to limiting what? Factor. It is very, very close. So they are more or less related. Still, you want to determine the number of units that you want to produce when you don't have enough what? Resources. All right. So thank you. See you next time.